That's the key, right?
Yeah, it's all about just having fun, guys. So, um, let me see. Obviously, my dogs are going crazy right now, but yeah. So we were just talking about the frustration of kind of what you guys want to talk about today. Leave a comment in there. Let us know. We'll try to hit on some stuff. But Ari, tell me about your frustrations, man. Let's hear what's on your
Well,
chest. Get it out, because this will
yeah,
probably be
yeah,
the last
no,
live stream we do for a little while because I'll be out of town for a week or two. So
running for the hills just in time for July 13th.
that's it, man. You getting out for
July
the hills, man? I'm getting out of here.
July 13th is my predicted doomsday. That is, for those of you who don't know what's coming, July 13th, that is the next CPI reading. Just to catch everybody up to speed, because I do work in news myself with the financial markets. We had the JOLTS job report come in today regarding job openings, and I think it was 11.25 million job openings there in May, which was down from previous month there, 11.68 if I recall from earlier today. It's been a long day. The
Yeah.
labor market is strong. I'm liking that. Now, in regards to what Colton and I were just talking about in terms of what's keeping me up at night, well, I have to be brutally honest here, and that is sharing that what I'm seeing on YouTube, what I'm seeing YouTubers talk about day in and day out is garbage. And during a time right now where a lot of investors are losing money because they are gambling in the market, this is not the time to be preaching garbage on YouTube. That's what's
Yeah.
keeping me up at night. That's what makes me frustrated. But Colton, I'll kick it over to you. What about
No,
you?
I think we're in the same boat, man. We've been texting back and forth just to give everybody a heads up. We've been texting back and forth, and I think we're both kind of just trying to figure out what's driving the demand for the garbage. Essentially, like why does the garbage get so many views and hardcore followers? And just kind of just to give you guys like a background of what's going on here. Voyager Digital files bankruptcy following collapse of Three Arrows, and some people won't likely get their Bitcoin back. And this is, and a lot of YouTubers were pumping Voyager Digital, getting paid from promotions and just things of that nature. And it's just I think between the two of us, we really try to create good quality content that's going to effectively impact people's lives in a positive manner. And it's just frustrating to I watch your content, and I definitely think I could be more entertaining on my side of things. And guys, leave comments in here for both Ari and I, how we can be better entertaining, better service you as the viewer, what we might be missing, what we need to add to. But to us, I think the growth frustration is kind of where it's at, and it just seems to be that people are drawn to the garbage, much like moths are drawn to light.
Look at, it's just, it's baffling to me because, when I take a look, and I'm a big macroeconomics guy, I think you need to understand at least a macro level overview of what's happening in the market in order to then understand, your investments and make wiser investment decisions. And then I jump on YouTube and I'm like, looking at some of these YouTubers talk about what I'm calling garbage because they're just, the run of the mill hot stocks of the day. Maybe it's in, crypto space, maybe it's not. But either which way, it's just someone throwing out the name of a hot stock and
Hmm.
hey, you should invest in it and do so now. And then I'm like, for me, because I work in the financial news space right now and I know like what's happening macro level wise, and I'm talking about that, and I'm like, where's the mention of X, Y, and Z, right? Like
Yeah.
right now, it's 2 o'clock there in the US, and we have the FOMC meeting minutes coming out right now. Like
Yeah.
investors should be interested in this stuff, but
Right.
instead everybody's wrapped up in this Voyager crap. I
Yeah.
gotta be
No,
honest.
I think that's the truth of it is like, what are we talking about here? We're talking about things that are actually going to move economics, like things that are going to drive stocks, things that are going to drive yields, things that are going to drive the job market. Nobody could care less. But you write something about, crypto's up 15%, which is fairly irrelevant in the long term of things. And it's just everybody's interested in that, and it's just it's just hard to it's hard because to me, like, I also got to talk about things that I have conviction in, right? Stocks that I have conviction in, and economics are things that I'm very convicted in because like you stated, if you can understand the economic backdrop, you can understand how to invest in individual stocks. If you don't understand the economic backdrop, you can't invest in individual stocks. And I want to give you an example today. Anybody want to take a wild guess why the banks are underperforming today? We talked about it in the last show, but I don't know if you guys saw this. The yield curve is inverted. The 2 to 10 is inverted. And we talked, and I literally stated the last time we went live that the thing I'm keeping an eye on is going to be the yield curve, because that's going to drive where markets are going. And guys, what happened today? The markets are fairly flat, but you looked at JP Morgan today, sold off when the yield curve went off. It was down 2%. Most of your banks were underperforming the broader markets. And it's in a weird environment here where growth is slowing down here, guys. Like,
Wait,
this
wait.
is not good.
I gotta jump in here. When was our last live stream? Was it Monday?
I think it was Monday. Monday was our last live stream, I think it was.
Okay, it was Monday. So this is crazy if you think about it, right? Monday was our last live stream. You literally threw out there like we should be keeping our eye on the yield curve, right?
Yeah.
For that inversion. On Tuesday, I think late afternoon into the evening, boom, the 2-year treasuries popped above the 10, right?
Yeah.
Like
Yeah.
how if people were watching these live streams
It's
instead of
crazy.
a lot of these other YouTubers and just whatever hot stocks, you could be making an insane amount, right? Like
Yeah.
over the span of 6 months, a year, 2 years out, right? In these longer term investments, value plays,
Yeah.
not garbage, value.
Yeah, the companies that are going to be here forever and actually dominate the industries that they're in. So yeah, I mean, so we got the yield inverted. The 2 to 10, the 3 month to 10 years, what we really need to keep an eye on. Which that's closing the gap too, really quick. Let me pull up that one. But regardless, you're basically got 100 basis points between the 3 month and the 10 year. The spread right now, 100 basis points. That's nothing, guys. That's nothing. That is extreme slow growth. That's concerning. And the fact that the markets are actually up today and that banks are not. I honestly thought banks were going to sell off even more with the 2 to 10 spread, because that's just killing them. You know. So
But to be fair, right now they're pretty. From what I'm looking at right now, it looks like the indexes are pretty choppy, and I
yeah,
think that's right now just due to the Fed releasing the minutes, right? But either which way, it's like if you know what's happening on an economic calendar, right? Like
yeah,
you don't need to be Nostradamus. And I'm not saying like anyone can really predict the
no,
future, but like have in mind an economic calendar of what's about to happen. Keep your eyes on some of the most important things. Remain patient, right? Like steady aim and just shoot for quality. Like
yeah,
I don't want. And I'm looking at Richard's comment, I guess here. Love the passion. It's not even passion, Richard. It's frustration. At this
yeah.
point, it's frustration.
Well, it comes either way. It's going to be a form of energy in there, whether it's frustration or
Oh, it's
passion.
energy.
But I mean, it's like for us, I think we want to accomplish the other, we want to put people in a better situation. I think is our ultimate goal, and we put a lot of time and effort in the research, where I could just pull up any article on crypto right now and just spew. But what I try to do is get the data, digest it, and give it to the viewer to the best of my ability. Is not always going to be right, probably going to be wrong most of the time, but at least I'm trying to give true data that's going to impact the economic backdrop of where your money should be going and where money flow should be going, rather than just grabbing something and just blowing it up. That's just a piece of, that's trash. And not everything is trash that people blow up here, but a big portion of it seems to be. And it's just unfortunate. So, but to get back, man, like, what it long term, where do you see the bottom? Where do you see in things kind of come into light here? Where are you seeing the opportunities presenting itself?
So I know I've spoken a lot about this. First of all, on Friday we have the June employment non-farms coming in. That should be really interesting to watch. But
Hmm.
the bigger date here, in my opinion, I'm doubling down on it every time I speak, is July 13th.
Yeah.
11th, 12th, and 13th. I mean, I am going to be watching what is happening in the market, how traders are trading, what investors are thinking, like what's the overall investor sentiment there, because the CPI reading to come will be insanely, I love it.
Yeah.
Frustrated lion, you're right.
Frustrated lion, man. Frustrated lion coming in hot.
If this is what it takes, man, I got to be this fired up every time. I mean,
Dude,
I'm
I'm
all for
fired
it.
up too. I'm fired up too, man. I really, really am fired up. It's definitely, when you see some of these more well-known YouTubers that have a good following, and I just see the kind of content that they're spitting out, it gets frustrating, man. It really does, because it's like, I wish I could grab that crowd and be like, listen, guys, this is what's happening. This is what you need to do. Stop listening to this crap, and I think it'll be years before they realize that, they were listening to the wrong people. Maybe, I don't know. Maybe they won't. Maybe they'll, who knows? Like I said, the brokerage account is your scoreboard. So maybe these stocks will turn back around that are down 80% and people, have
Maybe,
kind of thrown in the towel.
one of my favorite channels personally is Everything Money, and I
Yeah.
was watching one of their videos a couple days ago, and I saw Paul write on his, the whiteboard there, and he goes, "You got to say hello to all like the YouTube morons." And I don't like to name names, right? These other channels, but he went down this list of all these guys, and I just started laughing. But it goes to show, right? Like the people who are working in the industry or know really a thing or two about what's going on, they're not going to be pumping garbage. And it's like, I feel like there is a fair amount of the YouTube community out there who's really trying their best to pump content of value for everybody,
Yeah.
instead of just trying to get rich really by Tuesday, because you see this, income coming in on the YouTube front. But for me, again, it's not about getting rich here from YouTube. It started with the one goal to help one investor per video per day, whatever may have you. And Colton, I think, when we first spoke, that was something that we just agreed upon, and like why we
Yeah.
started our channels. But look, I mean,
Yeah.
to get back to what we were talking about, um, July 13th, right? The CPI reading, and then moving forward, we have earnings season kicking off, which really, in my opinion, depending on the industry, it could flip flop, right? I kind of don't yet have the best of feel for how each industry is going to be performing. I'm very
Yeah.
curious, but then come the end of the month, I mean, the Fed speaks, the market shakes, and Powell's going to come out. And the vast majority of investors are already, I think, pricing in a 75 basis point raise again. So I think that's definitely going to spook the market. I'm just patiently waiting here. What about
So
you?
I think a 75 basis point hike puts us in recession. I think a 25 basis point hike makes a lot of sense right now, for two reasons. One, you stated that the job markets are good, but we can start to see that it's coming back down. So we can see that there's some softness coming in the job markets. We know that the consumer is concerned. Consumer discretion is out the window right now. Investor sentiment is low. So we have all these all-time lows. I feel like a 25 basis point hike with where yields are right now make a lot of sense. And with inflation possibly coming down, I think that would do a couple things. I think that would give some optimism in the market. We could possibly see a nice pop in the market that would get people feeling a little bit better. We're already starting to see fuel costs come down at the pump. So I think doing a smaller hike would do a lot of good for the market for the short term. And also, I think we don't know what the outcome of this 75 basis point hike is with the Fed's unwinding a balance sheet quite yet. It takes time for this stuff to come through. So my concern is that another 75 basis point hike into a slowing economy won't show itself until probably December or January of next year, and at that point you can't go back. So
What's your feel on like where Powell stands right now? Because I personally think he's leaning towards another 75 point basis rate hike. And the
so
reason is because we have a strong labor market. I
mhm.
think he feels the confidence enough right now at this point in time to move forward with it.
So when you look at the labor market, to me, the labor market's going to be a lagging indicator, right? So what we're starting to see right now is gas. We're starting to see oil come down. Okay, that's huge. I think having oil right around 95 to 110 a barrel makes a lot of sense. And this oil coming down, guys, is not us pumping more oil out of the economy or pumping more oil, through reserves. This is oil coming down because demand destruction. People are not spending. The future of oil looks like people are not going to be spending. This is a slowdown. We have commodities absolutely crashing right now. Everything is showing that we're heading to a recession if we don't let off on the gas. So for me, I think 25 basis points makes a lot of sense because all indicators to me, we've already lost 20% on the S&P 500. We've already lost 30% on the triple Qs. We're seeing oil absolutely collapse. We're watching commodities absolutely collapse. 25 basis points right now makes a lot of sense to me to sit back and see what's going to happen because the first hike is still not impacting us yet. It's going to take time for all that to come through. And the problem is if you overhike, it's too late. We're already in recession at that point. And to me, guys, and you know this, Ari, I think we're already in somewhat of a mild recession and the job markets are just going to be a lagging indicator of that.
I agree. Technical recession wise here. I mean, the Atlantic Fed already came out. This was last week, or at least when we spoke on Monday, right? That what they were seeing on their tracker was negative 2.1%. It would drop 2.1, I think, right? I think it
Yeah,
was the number.
negative 2.1 is where we're roughly where we're sitting right now, and who
Yeah,
knows,
that's
like
what their
that could be
tracker was
adjusted
showing.
again.
So I mean, look, what I've also been really watching is Powell's like sentiment when he speaks, right? And it just he keeps throwing in there that at first he was like, "Hey, we can avoid this recession. Here's what we need to do." And if you keep listening to him, I mean, even when he spoke the other week, he alluded to the fact that hey, we may not be able to avoid a recession. And I think he's just slowly but surely
Mhm.
actually preparing us for a
Oh
recession.
yeah, 100%.
So that's why I think I
100%.
mean, he's going to hit the home run with a 75-point basis rate hike.
I mean,
Maybe go ahead.
I no, I think he's going to possibly do it. I think 25 makes a lot of sense where we are economically right now. I think we're at a breaking point economically. I mean, it's pretty clear we're at a breaking point. No matter what you look at, whether you want to look at consumer confidence, investor confidence, cost, inflation is obviously high, but it looks like it's getting under control. So we got oil prices collapsing. We got, future commodities collapsing. So there's a lot of indicators here showing demand destruction. And I just don't think you need right now to do much of anything. I think sitting back and doing 25 is doing something, but you still can always do an emergency hike later. If it's not enough, you could always come out and say, guys, we're going to do another 25 next week. That wasn't enough. But I think to come out and do 75 and 75, you're shocking everybody. And I think we could have a recession that is undefined like none other because of we're in unprecedented times, right? Every crash is going to be different. Every recession is going to be different. This could be a weird recession where we're technically in a recession and the lagging indicator is going to be the jobs market next year when layoffs start happening. And everybody's like, oh my God, what's happening? Well, we've been in a recession for 6 months and businesses are about to go under. That's what's happening, like so it's like
We
it's a
live in
different
a
animal.
reactive world, first of all.
That's the problem. It's so reactive, and it's like that's you're hitting on it because if he reacts, right? If he raises 75 basis points, and then all of a sudden we're like, oh crap, that was too much. What do you do now?
Yeah, there's no
Just
going back.
to me, all the signs are just 25 right now because demand destruction has happened. And you know what I'm starting to see? I'm starting to see a lot of guys that are shorting the market, like Bill Ackman. Oh, raise a full point. Yeah, Bill, I wonder why you want us to raise a full point here. Like we don't know what side of
Yeah,
the fence you're on here.
I'm a
Like
Bill Ackman fan. I'm a Bill
I
Ackman
am
fan.
too. I am too. But let's be honest. You don't think he's got a short? You don't think he's heavily shorting the market right now?
No,
He's
look, he
hoping.
always has his angles. That's what
Yeah,
makes him
man.
super smart. That's why I love him.
But
Look,
it's just
I
like,
think, to your point, I was just reading earlier today, a recent survey came out. I forgot the company that did the survey, but they found that 74% of the consumers that are out there are petrified of recession. And but I just think we're already on the edge. For me, I mean, I know if it was Fed Chair Colton, right, like at 25 basis points, I don't know, what I would personally do if I was Fed Chair Powell. And do you think he's sleeping at night? Like honestly, do you think this guy's going to bed at night and he's
I think
sleeping well?
he's super stressed right now. He has a huge task on his plate. I think there's just too much uncertainty going on globally, and I don't see inflation is already starting to peak. Like we're starting to see that. Now I could be wrong and we could have more inflation, but we can always go back and do an emergency hike. They've made it clear
I
that
think that would petrify investors, though. You know,
yeah, I think so. I think this is a self-fulfilling recession. I think there's so much
100%.
fear, so much fear. It's just like so much fear can cause you to do something crazy. And that's what we're seeing right now. So much fear is causing panic selling in the market. It's causing cryptocurrencies. But we're
Well,
starting to see,
it's also it's calling for this, the rallying, right, that's been happening. Nothing as of a week and a half ago, since our first live stream, right? Like, nothing really changed.
yeah.
We just took out all of the news headlines, the fear mongering, and all of a sudden we started to get this rally in the market. And I'm like, what? You know, like that, it doesn't make any sense because macro level wise, nothing changed.
And
And I just think no one's really thinking right now.
no,
That's my take.
there's not a logical thought process, and and I guess that just goes to show that there's actually not a logical thought process throughout most platforms that we were complaining about early on here. So I guess it's just fitting that there's no logical
Goes hand
thought
in hand.
process.
So
But like,
should I invest in Voyager? That's the big
yeah,
question.
hey man, it's at 14 cents now, so it only needs to go to 28 cents to double your money. So you might as well just YOLO into that and get
You
100%
know,
gain.
I'm throwing this in the ring here. You had mentioned the channel. I'm not a drop in names guy, so I'm not gonna name the channel.
No, call him out. No, I'm just joking. No,
I'm not
actually,
gonna name the channel.
I'm trying to avoid the YouTube drama myself because I can see myself getting involved in some of this YouTube drama with some of these newer YouTubers that are up and coming. So I'm trying to avoid that and keep this very quality type channel. But I do think people need to. Yeah, I do think people need to be
Well, look,
called out.
I you mentioned this channel the last, we live streamed, and
Mhm.
I had never heard of this channel, but I sure as heck took a look into it.
Yeah,
And, one of the videos recently posted, I just saw, Voyager is in bankruptcy, the drama continues, and I'm starting
yeah,
to read the comments, and
yeah,
then I see there's some subscriber, I guess, of this channel, right? Now's like the perfect time to get in. And
yeah,
I'm like, what? They
yeah.
just
Like,
declared like what in what world? In what world? And in this YouTuber, okay, I think the account was created in January of this year. Correct me if I'm wrong. I don't have
yeah,
all the
yeah.
information,
I
but
think it's about 8 9 months tops.
it's because this garbage is being pumped and it's hitting like crazy when people are typing it in Voyager, Voyager, Voyager.
Yep.
And here we are. I don't know how old or young this, certain subscriber was who wrote that comment, but at the end of the day, I mean, please, for the love of God, I'm hoping that this, individual does not throw more money in right now into Voyager.
Yeah.
And I'm hoping on the other, like, I actually went ahead to comment on that video and
Yeah,
share
I
my
actually I followed up on you on that one. I don't know if you saw that. I followed up on your comment. Yeah, you're gonna have to go back and reply because the person actually replied back to you. So
you
so
great, great.
you're gonna have to go have to read the reply, but I'm right underneath you. I backed you up on your comment. So and it's not like it wasn't like vicious gang up on somebody here. This was just good. You made a good valid quality point, and I just underlined it. And yeah,
Like I
yeah,
said,
you'll have to look at it later
I
on.
am also not here for YouTube drama, but for sure, when I see something, say something, right? And I had to say something. I had to just drop a tidbit of value there, and I'm just hoping that maybe a young, you know, uh, young and out there just hops on the channel and is thinking about Voyager, maybe sees my comment and goes, huh, maybe I
Something
should drop
logical.
off
Yeah.
Voyager and think about some value.
Yeah, something logical there. And Susan writes, they'll figure it out eventually, learning the hard way. But and she's absolutely right. I think people are starting to really figure this out the hard way. And it's like the quality companies that you bring up in your video, it's just not even a conversation. Like they could be down 20%, but you're not worried about them going bankrupt. Like that's the
Right.
last thing you're worried about. The free cash flows are strong, the balance sheets are strong. They pay that most of them are dividend aristocrats. They pay a dividend. They raise their dividend. Um, yeah, I mean, it's just quality over quality over the over the pumps. Okay, quality over the pumps is basically what we're trying to preach here. But you remember Richard, I think you were the one who wrote a comment about why I'm following the bank so much, and I'm just going to give you just a quick brief overview why I'm following the banks. So Richard, the reason why I'm following the banks is I believe the banks will lead us to the bottom of the market first. So over tech, over everything else, if we look at like a JP Morgan, because I want to use a bank that is well capitalized, that can get through hard times, and
The largest
is
bank
yeah,
in the
and it's
United
own
States.
exactly the biggest and best you can kind of match up to. If we look over the last year of JP Morgan's performance, they had a 52-week high of what 172 and a 52-week low of 109. So you're talking about banks getting pretty much cut in half across the board here. And what's happening is the reason why I keep talking about the banks, Richard, is yields have to get under control for the market to get under control. And the way yields are going to get under control is when they get healthy spreads. No, like we talked earlier in this video about inverted yield curves, right? We can't have inverted yield curves. We want some good spreads within the yields. And once the banks start showing price stability and we get some separation in the yields, that is going to be your bottom, in my personal opinion. It's not going to be essentially the Fed news. I think the market will, I still think you're right with the turmoil coming in July, but I think later on in the year, it's not going to be the market driven by the Feds as much as it's going to be the market looking through the yields and kind of the turmoil. And at that point in time, pay attention to the banks, pay attention to the 3 month to the 10-year spread. And I think when you got a healthy separation between those and the banks start showing a bottoming process, that's when you've kind of hit the bottom in the market, in my opinion. That's why I'm keeping a close eye on the banks.
I would agree with you there. I think what we're looking at, too, right now is investing. If you're to invest in the banks right now, and again, I'm seeing more, red come our way. So
Oh yeah.
dollar cost averaging into them. If you're going to go ahead and throw money into the banks, my bank of choice right now is Bank of America, but J.P. Morgan, of course, is right up there. And
Yeah, I
and I
think
almost honestly wish I
Bank of
started a
America is
position.
probably Bank of America is probably a little bit more of a value play at this point. A
Yep.
little bit, yeah.
Well, right.
Yeah,
The
no,
value.
it's the values there for Bank of America.
Yeah, but look, when the banks, when these interest rates start to rise, what I'm a fan of is the banks are going to be the ones to really profit from that, and you can just ride that wave of recovery up with the banks, the top banks. And I thought this was actually pretty interesting. Among the banks that recently raised their dividends, you know what bank didn't?
Was it who was it?
JP Morgan.
JB Morgan.
Why?
Yeah.
Because Jamie Dimon, and again, he was talking about this the other week. Jamie Dimon was just sharing that what he is predicting
Yeah.
is another, few months here of a lot of red. And
Yeah.
so he's full preparation for the
Yep.
worst, planning for
Yep.
the best, right?
Yes.
But already here and prepared for the worst, which I think is very wise.
And like here's the other thing. Like guys, like here's the thing. Like anybody that's coming into this, into the channel, smash the thumbs up here. Obviously, we appreciate the support.
Literally
Here's the
smash
thing. Smash it, just break that thing. But like here's the thing. You have Jamie Dimon, right? Been in business, has no, no political qualms, has no reason to fluff anything. You have a lot of these business owners, whether it's Elon Musk or Meta doing the layoffs, you have all these flashes of business owners here getting ready for something, but you have the government telling you we're not in a recession. I would rather trust the business owner that's trying to hire people and grow their bottom line than the government, who I don't trust any day of the week. So for me, I'm going to listen to the business owner that is saying, listen, guys, we don't know how bad it's going to be, but there's going to be some turmoil here and we're getting ready for it. I mean, look across the board. They're all saying it, but yet the government's coming out and saying this is not a recession. This is the strongest job market, and that's great. It is the strongest job market, but the bottom line is consumer is scared. Inflation is eating away at their savings, and it is concerning times.
100%. I mean, we got to be keeping out for right now what's happening macro level, and I think if just YouTube Jamie Dimon, in his recent talks, I think you can find some really good information just listening to guys like Jamie Dimon who are speaking out right now. Who That's actually a rarity because, as far as I'm concerned, he hardly ever speaks out.
Yeah.
And so when he begins to speak, I actually really start to listen to Jamie Dimon.
Yeah, no, I'm in the same boat. I listen to anybody that I think that has ran a successful business and has 2 cents to say, and I take it with a grain of salt, like obviously you just the data's flowing in now. Everything is the click of a finger, whether it's Twitter, YouTube, you can get information so fast and everybody has an opinion now. But the opinions I do listen to the most are the ones that really control the economy. I mean, let's just call it what it is. You're going to ignore what Amazon has to say? You're going to ignore what what Bezos has to say? Are you kidding me? Like this guy's running half the GDP of the United States economy. Like I think you better listen to what he has to say, not what Biden has to say, who's been in office for 50 years and doesn't know how to create a business to save his life. Let's listen to the guy that's actually producing GDP here.
You see, I'm sure you already saw it, but when Bezos, I think it was a tweet, Bezos tweeted at Joe Biden.
Yeah. Oh yeah, they're going at it now. It's great. It's great. The
I
drama
love
the
it, man.
drama never stops. Uh, but yeah, it's like it's just that's me. I personally would rather listen to somebody who's producing something within the economy that's starting to see they're seeing it on the ground level, right? So here's what's funny, Ari. The business owners see it in real time. Politicians see it a month too late.
Yep.
That's the
But
difference.
the politicians, I mean, here's the business owner, like you said, they're in the game, right? Like
Yeah.
they are the game. They're creating kind of the rules and the game itself. The politicians are puppets, really. And so that's why they're so reactive. And if you just take right now what's happening, I just spoke about this, earlier today in a segment that, President Biden is now reacting and trying his best to essentially aid in the fight, I want to say, against inflation. And he doesn't really have the bazooka, if you will.
Yeah.
That's more in Powell's hands with interest rates. But Biden is gonna, I think, move forward with relaxing tariffs on China.
Yeah,
And
that's the move.
but that it's such a limited move, right? But he's a politician, so he has to do something, and all of this is actually going to create a lot of criticism, in my opinion, and that may be severely damaging, I think, for his political career. Not that there's much left to it anymore.
Yeah.
Not to be negative here, but he's getting up there in age.
Yeah. Well, he's getting up there in age, and I think, I think it's pretty clear that it might not be his fault. Like I'm not going to take political sides here. It might not be his fault what's going on
No,
when we
I don't
talk
think
about
it's.
inflation, but he's going to take the blame for it. And I got my opinions on that, and I think there's a lack of leadership shown, and that in itself can make you lose your seat, in my position. You're talking about the most important part of leadership in our country. You need to step up. You can make the wrong decision, just make a damn decision, man. Like I'm all about it. Like make a decision. This halfway, we're gonna see what happens. Like no, we don't have time to see what happens. Inflation is out of control. Like we got to start doing stuff now. Like we're gonna lose power to foreign
Well, look,
entities here.
when politics gets involved, it's dangerous, right? Because a presidential term, as we all know, it's 4 years. Okay. And then what usually happens, the next president comes in, and if he's on the opposing party, he's going to basically backtrack everything that just happened. So, I think what's dangerous is if we have Biden, relaxing the tariffs, are we thinking 5 to 10 years out here with that move? And I get it, right? He's trying to relieve, inflation here, inflationary pressures for U.S. consumers. But I want to say we should be thinking longer term politically, because I'm a fan of what Ray Dalio consistently shares is that we have to watch China.
Yeah. No, I
Do you have
agree. Yeah, I agree. That we definitely have to keep an eye on what they're doing over there. And, I think we're losing some momentum as a country with what's going on. But then again, globally, I think everybody's kind of hurting right now. So it's like, it's almost a race to the bottom. Whoever can stay afloat, is going to come out of this over the next 10 or 15 years as probably the dominant country. And I think we have an opportunity to really regain some power here. We could really stick it to China. We could really put tariffs back on them. We can really bring jobs back over here and essentially cripple their economy and build up our economy once again and be one of the biggest producers of, whether you want to talk about EVs, technology. We're talking about Apple. You're talking about the greatest names are still, you could come back to this country and really produce. And I see that as an opportunity. So when I see this, the tariffs and stuff, it's like, no, dude, up the tariffs, bring our jobs back over here. We don't, I know we don't have enough jobs to supply right now. With what's going on, we need more population essentially. But I mean, to me, I just see China really, everybody's in a bad
I think
situation
it's like
here.
we're flirting with danger, right? It's kind of how I see it. And again, it's because the politician is going to try to do everything in their power to essentially just secure votes for their party. And I just, as a leader, right, I don't think you should be thinking about the next election. I get it, right? You want to remain in power. But like if you're a true leader, you're going to think about after your term. You're going to think about when you leave office, right? What is really the best move? And I'm not entirely sold here on that. Relaxing tariffs right now in China is the best move. And to your point, I think we really should be focused on bringing jobs back to the United States. I think that's key. And I think
Yeah.
what you already just shared, right? We have a point right now in which we can capitalize on is China's weak. Actually, they had the other week loosened restrictions because they have a zero COVID policy in China. I reported on this the other week that they finally loosened restrictions, and then on Monday of this week, 11 cities had COVID spikes, and they started to, you know, essentially put more restrictions back on these 11 particular cities and some regions. But the point is, we have an opportunity right now, I think, to capitalize on that instead of flirting with danger and not thinking long term.
Yeah. Yeah, I agree. I agree. So this is an interesting question here, and Mikal is like one of the most active subscribers on the channel here, and super value investor, always picking up good value. He's a big T row guy, so you guys would probably hit it off here. So the Schiller PE ratio. Now, if I'm not mistaken, basically the Schiller PE ratio is kind of a PE ratio that takes out a lot of different fluctuations in the market and kind of gives you a different type of valuation, more of a flat line valuation without the ups and downs. And anytime the Schiller PE ratio gets too overvalued, I guess historically, I'm Googling it right now, but historically it needs to sit right around 15 or 16%, or 16 to 15 to 16 PE ratio on the Schiller. And anything above that is usually pretty overvalued for the market
Double
here.
that right now, right? Or
Yeah.
it's at least it's much
So
higher.
yeah, we're at a 28. And so this has kind of been my argument on why I think valuations need to come down. And it's a really good question. Um, I think personally, Ari, I thought the S&P should be trading around 36, 3,700, which would put it around a 17 PE ratio. Now, if I factor in Schiller, it probably needs to be closer to 34, 3,500, which means that there's probably decent and significant downside here. Actually, I think we're trading at a 26 on the Schiller, and he said the average is about a 15 to 16. So let's just use 16. I mean, you're talking about another 30% possibly downward spiral here.
Look, I think we had such a bull market, like a very strong bull market coming out of in 2020 and coming out of 2020, that I just think we've been overpriced now for a while. Um, industry through industry, and I think we haven't really had the time just because of everything that's going on to really kind of get our groove right, get the bearings right. That's my take on it.
Yeah. Yeah, I see a huge I mean, I see a huge problem. So obviously we know about and we'll just go really quick here because I don't want to bore anybody, but we know about all the stimulus we got. We know about zero interest rates, and that caused so much spending that it took a while for us to catch up to all that spending. And what we're seeing is a lagging, once again, it's always a lagging indicator. That's what I hate about looking at past economics, like the jobs report of June. Great, jobs report was in June. We're a week in July, and we've already had like 5 businesses say that they're freezing or doing layoffs. Like that
Well, what do you
that
think about
data.
what do you think
You,
about April?
Oh, it's the same thing. It's just like it's so late. It's like, dude, are you like we're so
You
that
know,
data is so it's so outdated, and even it's only a week, but look at what's happened over that 8 or 9 days. It's been,
yeah,
the job market is so strong, but now like I don't know what July could be a completely different story from what we're hearing in the first week of July.
yeah,
So
yeah. Well, look, I don't, Colton. I don't know if you just caught my segment earlier today on Tip Ranks there, but I spoke about this actually, literally towards the second end of one of the segments. I shared that even though the Fed's minutes are coming out today, and they're out now, right at 2 o'clock, they were supposed to come out, so
yeah,
it's
it's
two
getting digested. It's getting digested by the market pretty good here,
as we
whatever they're
speak.
talking about. Yeah.
So and I would assume that, right? Because it's not really new news. But what I had shared earlier today was the fact that, so you're going to have investors that are sifting through the minutes and looking for the tidbits of basically why the Fed did what they did and the tone that they used. But here's the thing, we already know we already knew that the tone was going to be pretty aggressive, and we know that the tone was aggressive. So
Yeah.
we're anticipating the Fed's minutes coming out. Why? Because it's exciting.
Yeah.
I think it's
Yeah.
something that
It's
we can take.
emotional.
And then you start to think about what Peter Lynch shared once, and this is for me. I die laughing when I think about this because I'm a huge economics guy. I love economics and I love looking at the macros, right? But Peter Lynch shared that if you spent 13 minutes a year studying economics, you'll have just wasted 12 minutes. It's true,
Yeah.
right? Like I talk all day long about, what's happening, what happened, but like it's not about where we are. It's not about where we were. It's about where we're going,
Yeah.
right? And that's
That's
the
that's
forward
the
thinking.
argument. Yeah.
Yep.
Yeah, and that's the thing, like, that's the thing I try to do is who cares what like a lot of these YouTubers are talking about the news, and that's like great, and they get a crap ton of views on the news. I take the news and I'm like, this is what I think is going to happen here, guys. Like, I think jobs are going to be a lagging indicator because everything else is flashing recession, and it seems that there was so much stimulus and demand pulled forward that the job market has like expanded to this nth degree that we don't know, but it's only a matter of time before that's going to absolutely collapse because demand was pulled so much forward and there was such a need and we're so behind on raw materials and just everything else that now what happens is we don't need all that stuff and earnings are going to come down. When earnings come down, the job market's going to follow. That's just my opinion.
Yeah. Oh, we'll see. I mean, look, we're kicking off into earnings season soon here, and I think again, economic calendar, right? Anytime something's on the economic calendar, investors get worried, especially in the market conditions in which we're living right now. And so, I just think anytime you're seeing something pop up on the economic calendar, be patient, right? Give it
Yeah.
some time, get a little bit closer to those dates before you really throw large sums of money into the market. Let the market kind of digest the news a little bit, react. They're usually reacting fearfully, which
Yeah.
then presents the opportunity for you to dive in and pick up more of a discounted stock opportunity.
Here's what I would say, Ari, is what I've noticed with the last couple meetings with the Feds is you get this pop that we're getting just right now, about a half a point all the way up to 2 percentage points I've seen when the Feds talk. And it's not always good what they're saying, but yet the market's just like buying, buying, buying. And then the next day you get the sell off. And it's like it's like this bull trap that they're setting. It's the wildest thing. I don't remember a time where you get this kind of action in the market and then the not only is it the stock market but it's also yields too. You get this wild moves in the yields And then the next day you get that sell off, and you're just like, what the heck just happened here? I thought it was a good meeting. But if you really listen to what he said, it wasn't a good meeting and everybody was buying it, you know? It's really weird. It's like it's
The
like a
news kind
24-hour
of, I'm trying to
delay.
see what even happened right now.
Yeah,
But like,
if anybody can put it in the chat, if anybody's following what's going on here, I think it's probably just confirmation of I would guess a confirmation of a 75 basis point hike, but I don't know. I didn't catch anything, so I'm on YouTube. I mean YouTube. I'm on Yahoo right now, and I'm not seeing anything.
I'm seeing the
Says
stock market was down a touch Wednesday after the release of the minutes from Federal Reserve's most recent meeting. Okay, but right now I'm also seeing that the markets are popping off. I mean, I'm
yeah.
all green here.
Yeah, and I wouldn't buy I mean, I don't even know what was said. I wouldn't touch this because to me this has happened. I've been watching this. This has happened consistently where they come out, they're meeting, and Jerome Powell is doing such a good job of kind of feeding you crap, and everybody's like, "Oh, this is good." And then you're like, "Hold on a second. Did I just eat crap?" And then the next day you're like, "Oh, wow, I just ate crap."
I
Like,
would love to go to Vegas with the guy. I mean, he is really a guy who just can sit at the table there in Vegas and just the straight face. You would never know the cards that he has.
no, yeah. Yeah, you would never know. No,
I
he's
mean, he's
definitely
better
he's
than
got
Bill
a
Clinton.
He is. He's got a poker face, man. He's definitely. I was shocked the last meeting that came out. I told you this one. I was like, I told my buddy, I'm like, Jerome Powell literally just said we could be in a recession. It's because before he thought it was unavoidable. The last meeting, he was like, looks like it could happen, be a mild recession, and then the market skyrocketed. It went like up 2%. The next day, we had
It's
a
not
massive sell
what's
off.
being said, it's how it's being said, right? And that's
Perfect.
why I think Powell's actually a phenomenal leader. I mean, he does a great job because the way he's able to present the information, it's very soothing, it's very digestible. It makes you feel it's like, it's Papa Powell. You feel good. You listen to him, you're like, oh, everything's going to be all right.
Yeah.
Even when he hits you with the news that, like, yeah, we're in a recession, or, it's probable that we're going to be in a recession, just the
Yeah.
way he shares it, the market's going to react the way that it is. And I
Yeah.
think that's your point. That's happening right now.
Yeah.
Because I don't see anything that's changed again. And here we are in this little rally.
The only thing that has changed is earnings need to come out. Like, you can't, like, right now, you shouldn't do anything, guys. Like, I'm not saying buy or sell. This is not, let's just get this out of the way right now. This is not financial advice. This is just my opinion, guys. But right now, you shouldn't do anything until earnings seasons come out and you start seeing companies like Apple, Google, and Amazon saying things look good. This was just a small blip. Supply chains getting fixed. You wait until that comes out because those companies are going to move the markets in either or direction. So if
I
I
love
don't
that.
care what stock you're buying. I don't care what stock you're buying.
I love that you just mentioned, those couple stocks, because right now what I'm getting at with the data that I have on my end, is some of the top search stocks. We got Amazon, Tesla, Apple, Neo, Nvidia, Alibaba, Microsoft's on there, Google's on there, PayPal's on there, Meta's on there, Shopify, SoFi, Square, Coinbase. I think that's important, right? But again, to go back to some of the first few names, Amazon and Apple, those are your safe bets right now.
Yeah.
And I wouldn't buy on green days, but those are your
No.
safe bets. And a lot of the money that's pouring into Apple actually right now, hedge funds.
Yeah, hedge funds are going heavy into
There's a
Apple right
reason
now.
for that, right? They're not buying Voyager.
Yeah. No, yeah. Yeah, exactly. Like like that's okay, so the comment that I left below yours was something about Buffett. I was like because I put you wrote a comment and I went underneath you and I'm like, yeah, there's so much great value on sale. Would Buffett buy Voyager? Question mark. Like, like do what the hedge funds are doing. And like you can follow the hedge funds nowadays, and it's like they're seeing the value in kind of capital preservation right now, right? Like capital preservation is king when we talk about inflation and we talk about uncertainty and supply chain restraints. But like capital preservation is so important right now. And you're talking about maybe it's not the best name and you're not going to get this great return, but your capital should be preserved over the next 10 years in a company like that. I don't imagine them
Check
going
check this
bankrupt.
out. Check this out. Ready? This is I'm on tipranks.com, right? I'm taking a look at Apple and the hedge fund activity that's currently happening with Apple. We got Strategic Point, brand new position with Apple, H&H International added, Gardner and Russell added, Martin Investments added, HM Capital Management added. I mean, the Wedgwood Partners added. But these are not small hedge funds. These are some of the top hedge funds. They're all adding.
Adding to it. Yeah. Yeah.
Take note of that. And
Yeah.
same with Amazon, by the way.
Yeah. I mean, Amazon,
If I'm not
Amazon
mistaken,
is
didn't Buffett add Amazon like not too long ago?
he I'm not sure. I know obviously the city
Do
move.
your due diligence on that. I'm not a financial advisor, but
Yeah.
I could have sworn I saw something like a month ago or so that
I
was
know he
Buffett.
added to I know he added to the oil position there, Occidental, I know
He's always
Citigroup.
adding Oxy. Yeah.
Yeah, I mean, so that tells you something too in itself. Like, is oil stabilizing? Is it going to be slightly elevated? Mainly, it doesn't matter if they're going to be slightly elevated. I think that he's probably thinking if oil stays over $85, $90 a barrel, there's a certain profit margin there that spits off X amount of cash flow for Occidental. So I think he's thinking more cash flow standpoint and longer term value add than he is the short term fluctuation of oil. So I mean, when you really think about it, if you look from a valuation of cash flow, the oil companies are super cheap if you're buying from a cash flow standpoint, super cheap. You know,
You know what I like right now as well? ExxonMobil.
yeah, trading pretty cheap right now too,
Can
right?
you pull them up?
Yeah, let me see really quick.
P 13.74, down on the month.
Yeah, I got you. So is this a position you're kind of looking at right now?
I have ExxonMobil in my portfolio, not a large position, but I do have Exxon in there. And so one of my concerns regarding ExxonMobil and the alike is just the fact that, the future being a green future and the EVs coming out, I do get concerned, but then on second thought, it's like, that's not going to happen overnight, right? Like it's
Yeah,
going to
yeah.
actually take a long time for this shift or transition rather into, I mean, like total EV. So
So
I'm a fan
guess
of
I just heard this
Exxon.
today. So luckily I just heard this today. It works out pretty well. Guess what percentage of vehicles are purchased? What percentage of vehicles are purchased that are EV? If you were to use 100%, roughly X amount of percentages are EV. What would you guess?
23%.
6%. 6% of
I'm
vehicles
more
are
optimistic that people want to help the earth, like
Yeah,
I
no,
was
well,
saying.
I think it's an interesting stat. Now I have to double check. I heard it on the news right before we started this live stream, and I was like, oh, that's an interesting thing because I would think the same thing. I thought it'd be closer to 15, 20%. So I guess 5 or 6 years ago it was roughly 3%, and now it's pushing 6%. PJ says it's 10. I don't know if he was guessing, but yeah, so 6% is what I heard today. That's the purchases of EV vehicles is roughly makes up 6% of vehicles purchases, which is a double. It's a 100% increase from 3% a few years back, but it just goes to show how small of a market it still is. And
Well, look, it's even pretty insane to think about this. It's very similar when it comes to like e-commerce plays, right? Like we're in 2022 and everybody knows about Amazon. But the truth is the numbers aren't as large as we think they are. Like the globe is still trying to get a grasp on e-commerce.
yeah,
Like there's still massive opportunity there.
yeah. Oh yeah, the e-commerce business is interesting. I was thinking the other day when we were talking about two stocks that we would buy, and I still think it's a little expensive, but I think about the opportunity that Disney has. Okay, and I'm bringing up Disney for a few reasons. Disney to me, I think has a bigger growth rate than I'm giving it credit for, and then the experts are giving them credit for. Because here's why: Carnival Cruise Line and all these cruise lines don't have any other streams of income, right? So that's their main source of income. Can Disney become one of the largest cruise lines in the world? Can they become one of the largest streaming companies in the world, which they're already doing? And then the Parks and Rec thing is almost like the wild card. Like if the economy is going up and down, that's kind of going to fluctuate. But I start looking at Disney and I'm like, because they have so many streams of income and they're starting to become powerhouses in both streaming, they just got another cruise line launched. And you start looking at these cruise lines taking on all this toxic debt. Like which cruise lines are going to make it? I don't know, but I know Disney could buy another few cruises and still the rest of their business model is going to sustain that business model in a downturn. So
So
I
I
look at
picked up
Disney. I don't know. What's your thoughts?
I picked up Royal Caribbean. I loved, I'm a huge cruiser. I picked up Royal Caribbean in 2020 when it fell. I rode that wave of recovery. Sold out of Royal Caribbean after a year and a half with my profit invested elsewhere, of course, in a dividend investment. Um, but at the end of the day, I think you're onto something, right? Like what we're looking at when it comes to Disney, it's their parks and rec. First of all, they're not even fully open, right? There's still a COVID scare out there.
Yeah.
We're not done with COVID. A matter of fact, one of the producers, the company, his family came down with COVID. I haven't seen the guy in a few days now. He has COVID. Right?
Yeah.
It's not over.
Yeah.
And
Yeah.
so
To
I
me,
think
I'm
there's,
starting to look at Disney as, this is one that let me pull up the chart and we'll call it a night soon here because I know it's late over there. Um, But Disney is one that has fallen off, and I did a valuation on Disney, and I think where I messed up my valuation, and guys, here's the thing about valuations. They're great, but you're plugging in the number. So your bias is part of the valuation. Like how much do you think they're going to grow? And we look at Disney, right? I mean, you're talking about $180 stock down to 90, literally cut in half, Ari. But yet their business model is getting stronger, right? They're adding more streamers, they're adding more cruise lines, the parks are just starting to open. This to me is a huge disconnect. Like, this is where the
it's
disconnect is for
down
the
what,
market.
roughly
Yeah.
11, 12% on the month.
Yeah. Yeah. For the month, I
It's
mean,
all for the
geez,
new.
yeah,
I mean, this is
108.
just the news drive, and this is the thing when you have really investors jumping on whether it's YouTube or elsewhere, or even just jumping onto Robinhood and buying and here and selling there. They're not actually doing the due diligence because, to your point, a stock share price does not indicate the health of a company.
Right. And that's where you have to, as an investor, you have to find those disconnects. And if there's good quality to be bought there, and your rate of return could be, there's a tremendous amount of upside. That's when you buy. Like that's what you want. You want this to happen. Now, personally, my girlfriend, she's all about Disney, and I had her buy some shares around 93 and 97. So the cost basis is probably where she's at right now. But I told her, I said, wait until it gets into the 80s. I do think you might have the opportunity to buy it in the 80s. That's roughly where I think it's worth. I think it's an $80 stock. But then I think about the moat that it has, and I think about the opportunity to kind of build in areas that are deteriorating. Like let's think about Netflix. The amount of money that they have to spend for streaming. Disney's content is kind of just set. Like they already have a ton of content that they've already created.
You're
It's already
talking
done.
about iconic, aside from Jack Sparrow now, which rest in
Yeah,
peace, right?
which is yeah, I know. Well, they're
But
still going to make money off of that.
yeah, no, of course, it's just a shame. But aside from Jack Sparrow, you got iconic characters floating around in that moat. That moat's not
Yeah.
going anywhere.
Yeah, the moat's not
That's
going
your money.
anywhere. Yeah. Yeah. So for me, I was looking at Disney and it's a hard one to value, Ari, because the cash flow is kind of all over the place with COVID and it's really hard to get a projection of what you think their free cash flow should look like. So that's the hardest part about Disney is like, what should their free cash flow look like when everything's up and running? Because if everything's up and running and they're clicking on all cylinders, it's undervalued. But if it's kind of where it's at now, you're probably buying it at fair value. So it really just depends on you and where you think their cash flows are going to go.
I think that's a lot of companies right now. You
Yeah.
posted a video the other day on Medtronic, and
Oh,
that's a company.
good. That's dude. That was a great call out, man. I like that. I'm starting
Look,
to like
that's
that
a
one.
phenomenal company, and I just think it's very hard right now to gauge, what they're gonna be producing because supply chain disruption. I mean, with China shutting back down again, right? It's only going to have a ripple effect on global supply chains. Now, who's going to be impacted? You will have a company like Medtronic once again impacted because the global supply chain.
Yeah.
And
But
we can have the strongest labor market in the world, but with their sales decreasing because they don't have what they need to produce, it's the company.
well,
It's their business
we
model,
got
right?
we got
MedTech.
yields collapsing live right now. Yields collapsing live right now. The 2 to 10 is absolutely collapsing. So it's interesting that is the market still going up, because that should cause a sell off.
Yeah, the markets are still green right now.
Still green. I
Dow
mean,
Jones up, S&P up, Nasdaq.
that kind of inversion look at this inversion that's taking place right now.
No one. This is too
So here,
boring. This is what.
well, here's the weird thing is you got this massive inversion taking place, but the market's going up. But if the inversion is taking place, people are flocking to most likely flocking to the long end of the yield, which means they're flocking to safety and driving the yield down. So it's going to be interesting to see what happens tomorrow. I'm actually surprised that we're trading green right now. But anyway, to get back to Medtronic, what I want to do is, where's the 3 year? Okay, so let's look at this, Ari, right? So I did a video on Medtronics. I got like no views on this video, right?
Because it's
Because
boring.
it's a boring stock. I don't know why you recommend these boring companies that cause me to lose my
So,
viewership,
I forgot
but
who it was on your channel. They called me Boring Blue Lion.
yeah, boring blue line. I think it was
But
Richard.
you
I
know
think
what? I'm
Richard.
rolling in it. So
That's hey Richard. If Richard's here, Richard, were you the one who called him boring blue lion? But all right, here's the thing, right? I did like a valuation on a Medtronic, and I think if you want a pretty high internal rate of return, you got to buy the thing in the low 80s, high 70s. To me, this is 140, 135, $140 stock, about 2030 time frame. But what I want people to look at is you can lock up your money right now in a 10-year yield for less than 3%, or you can buy this thing on the dip, get a 3% yield, and hold on to it for 10 years and get capital appreciation. Because in my opinion, I think it's $140, $150 stock, even if it grows low single digits by 2030.
I think Medtronic will come down even more. I haven't been buying Medtronic. It's on the watch list. And I think, come earnings season here, and they're going to talk about, again, sales. It's going to be depressing, but their stock share price, I'm predicting, will drop further. I would not buy at 89. Um, I'd buy low 80s.
So I
High
had
70s, low
78.
80s.
Yeah, I had 78 as a price target for my valuation when I did them. And but if they can grow high single digits, like 8, 9%, I could see you buying in the high 80s. But
Well,
so I got a
the thing also about Medtronic, right, is once they get their bearings going and it pops back up to, I can foresee it jumping up to 120 plus, 120, $130, moving into the future. But it's a stable company, right? Like when all is good, it's a very stable company.
yeah. Oh, it's super, dude. It's super stable. I don't think I don't think we're gonna if this inversion goes deeper, I don't think we're closing green. I think this is going to be a short-lived pop.
I mean, look, I don't even know
If that
why.
inversion goes any deeper, I think it's a short-lived pop here.
It was choppier, to start the morning and the afternoon off because we were anticipating the minutes. And now here we are in this little rally. And I think it will just come back down. I don't think this is anything. And
Yeah,
no
no,
one's
I
going to
would
be
agree.
paying
I would agree
attention
with you.
to the non-farm payrolls coming out on Friday.
No, and
No one cares.
that's a good call out, man. That's a good call out. It really is. It's important stuff.
It's
But
incredibly important. Just no one's gonna really. I mean, I care. I'm gonna be watching, but I think no one's gonna be watching. I think again, even on July 13th, I commented on someone's video and I said, on July 13th, doomsday, right? And someone goes, "You seem pretty confident in that. What's July 13th?" And I'm
no,
like, in my head,
you
I'm like, you probably shouldn't be investing.
yeah, if you don't know the economic data, around it, then you probably should just be buying, probably buying,
Voyager.
yeah, buy Voyager, especially now at 14 cents. Hey, the closer it gets to zero, guys, the less risk you really have in the stock. So it doesn't get less
Maybe we
riskier than this.
mentioning Voyager. This will get some
Dude,
love here.
dude, the closer, like, so when it's 5 cents, go for it. It's like, what the heck are these people thinking, man? I don't get
I'd go
it.
all in at 15 cents, honestly.
Well, here's the scary thing, like you're like, oh, how much lower can it go? You put 20 grand in, it's at 20 cents. It gets cut in half pretty darn quick when it goes to 10 cents, make you sick to your stomach, make you think twice about the investments
But
decisions that you've been making.
it could go to 20 cents.
It definitely could. It definitely could, especially right now. It's like, those memes, the meme stock crowd is out there licking their chops on this one. I would probably
There's
not be
still
surprised.
people talking about AMC. Like this is
Silly.
old news, right?
Silly.
There's people talking about this.
Yeah, it's silly. It's just silly stuff. But I mean, so I guess we'll sign off here. It's probably going to be probably the end of July. We could maybe set something up and get back on the horse here. Guys, we obviously love the support and commitment. If you guys can make it, if there's things you want us to talk about, write it in the community chat. If you get a chance, Ari, if you, I don't know if you want to email your crew or do a community post and see what kind of stuff they want to talk about, and maybe we can start hitting on some topics here that people are really interested in, because there'll be a few weeks here where we'll let some data kind of unravel here, and maybe people want to talk about inflation, job market, stock, individual stocks. So
We'll be entering into a brand new earnings season probably by the next we're on here live streaming. So, just to double back there on your point, if you have, things on your mind, questions, I mean, fire away while we're on the live stream, but also just, either email us or, the community chat, whatever it may be. Let us know your questions, your fears, maybe your concerns. If you're curious about something, maybe in, Colton's portfolio, mine, what we're currently up to. And I mean, as far as I'm concerned, I'm going to be completely transparent. So, I'm here to help you guys. I know Colton is as well. And we just want to make sure that we're setting everybody up for success to the best that we can.
yeah, absolutely. Absolutely, guys. So hopefully everybody has a great week. And yeah, we're gonna sign off here. Ari, we'll try to get back at it soon, man. I'll be out of town for a little while. And then everybody else, if you guys are enjoying this, just ask that when we do post a live stream, you guys kind of hit the reminder so you guys get alerted and we can have a good interactive crowd and get some topics.
Hit the reminder and smash the
smash
like
the
button.
thumbs up.
The thumbs up.
Give it a thumbs up. All right, guys. We'll see you next time.
All right, everyone. Bye-bye.
Peace.